On October 23rd, 2017, it was the day I could officially call myself an investor when I invested my first £400 into the stock market. Today, 4 and a bit years later, my total investment portfolio is valued at £54,191. But how did I get here, and how do I plan to grow my investment portfolio to 6 figures by the end of 2022? Well, in today's video, I'm going to share with you guys my own personal investing journey. I'm going to share with you guys my investment strategy, which I've used over the course of the past 4 years, along with some tips and tricks which I've used along the way in order to maximize the value within my investment portfolio. We'll dive a little bit deeper into my current investment portfolio and talk about the current asset allocation, and we'll also dive into how I plan to change that asset allocation in 2022 in order to achieve my 6-figure investment goal. But before I do so, guys, be sure to drop a like on the video for the YouTube algorithm. As well, be sure to let me know down in the comment section below what your investment goals are for 2022. So let's kick things off by talking about my own personal investing style and strategy. Well, I'm not really a Warren Buffett style value investor, and I certainly don't base my investments on the Elon market hypothesis, as Bloomberg's Matt Levine has coined it, where you essentially invest into crazy speculative assets in the hope that Elon Musk then goes on to tweet about them to send the price of the asset to the moon. Some people out there think it's the latest cutting edge investment strategy out there, but until it's been tried and tested over the course of the next 40 years, I think it's an investment strategy which I'll personally stay away from. So having said that, where do I sit on the investing spectrum? Well, I guess you could say I'm probably somewhere in the middle, or perhaps a little bit more towards a Warren Buffett style of investor, but not really exclusively. I guess you could say it's kind of a little bit of a hybrid model of investing where I try and push the boundaries of risk and reward, but not having too much risk on the table. I'm mindful that I'm young enough to take on a little bit of risk and kind of dabble in some opportunities that could have huge potential upside, but I'm also not going to be prepared to take extreme risks in terms of investing into really speculative assets like NFTs, which may 100x or simply go to zero. And you'll kind of see that a little bit more clearer when I dive into my investment portfolio and the current allocation in which I have. But before I dive into the investment portfolio in a little bit more detail, first I thought I'd share with you guys the actual timeline of the value of that portfolio and how it's grown over the course of the past 4 and a bit years. Now, to be clear, what I classify as an investment is my stocks, ETFs, crypto, as well as any diversified funds. What I don't class as an investment is anything that's either illiquid or a non-productive asset. For example, the house in which I live in today, which I am obviously recording this video from, and things like cash in the bank account, as well as my personal pension fund as well. So with that said, let me take you through the growth that I've seen within this investment portfolio. Starting off back in 2017, I obviously only invested during the final 3 months of the year, and during that time, I grew my investment portfolio from 0 to £1,358. Then by the end of 2018, the portfolio was valued at £5,824. By 2019, £13,114. 2020, £27,898. And year to date so far, as at recording this video in 2021, we're sat at £54,191. You can see the huge exponential growth of this investment portfolio over the course of the past few years. And based on the current growth rates in which I'm seeing, I'm certainly hoping that I'll be able to achieve my £100,000 investment portfolio goal by the end of 2022. Now, of course, a large chunk of this investment portfolio is simply unrealized profit. Most of it, in fact, is the investment principal which I've actually put in. But nonetheless, you may still be asking, well, how on earth have you been able to accumulate this kind of size of an investment portfolio and then kind of double the value of that investment portfolio over the course of the past few years? Well, it primarily comes down to 2 main things. The first thing being that I've been able to increase my income, and as a result of that, it's allowed me to be in a position to actually invest more into this investment portfolio. I think it's so important to go beyond that of the income that you get from your 9 to 5 job. And the reason why I say that is inflation right now in the UK is 5.1%, which means if your employer hasn't given you a 5.1% pay rise for the next year, then in actual fact, in essence, you've been given a pay cut. Due to this, I think it's so important to increase your income over time. And for me, fortunately, I've been able to use YouTube as a means of generating an additional source of income. Having YouTube as an outlet has certainly helped me invest more money back into my portfolio, and as a result, it's accelerated the time in which I'm able to achieve my financial goals. The second part to the growth in value of the portfolio simply comes down to consistency. Investing every single month into the market, regardless of whether the market is up, down, or trading sideways, it really doesn't matter. It's the investing strategy which I deployed when I first started out investing, allocating a percentage of my income every single month and consistently investing it month in, month out without fail. This investing strategy is also known as dollar cost averaging if you're an American, or just cost averaging if you're over here in the UK, investing your hard-earned pounds and pence instead. It's certainly not the best investment strategy, but it's also not the worst. In actual fact, lump sum investing typically outperforms that of dollar cost averaging. According to some studies, apparently 75% of the time, lump sum investing will do better than dollar cost averaging. But despite this, it's an investment strategy that works for me personally based on my own personal financial position. I obviously don't have just hundreds of thousands of pounds lying around which I can just lump sum into the stock market at any given point in time. So because of that, I've had to kind of slowly and steadily build that investment portfolio every single month instead. But then again, having said that, on occasion when I see opportunities to do so, I will look to lump sum some additional money into my investment portfolio. For example, back in March of 2020 when we saw the big stock market crash, even when we've seen kind of minor stock market dips throughout the course of 2021, I've used these as opportunities to actually invest a little bit more aggressively back into my investment portfolio. But on a month by month basis, the cost averaging strategy is the one in which I stick with. So now let's take a look at my asset allocation and how that could potentially change throughout the course of 2022. So first up, let's talk about my current asset allocation in 2021. As of right now, I have 54% of my portfolio in individual stocks like Tesla, Apple, Amazon, and Meta, amongst a couple of others. Most of which are either big tech or growth stock players, which I personally feel can outperform the S&P 500 over the course of the long term. I then have 36% in ETFs or exchange traded funds, and diversified funds where most of it is actually held in an S&P 500 ETF. I then have 7% in cryptocurrency, mainly across Bitcoin, Ethereum, and XRP, but I do have a few other altcoins in there. Then finally, I have 3% in bonds, which is simply just the 20% part of the 80-20 life strategy fund, which is over on Vanguard, which for those of you guys who don't know what that is, in essence, it's just an 80-20 stock bond split. So that is my 2021 asset allocation. It's fairly aggressive with a big chunk of my holdings held in individual stocks, and it's certainly nowhere near kind of Ray Dalio's recommended all-weather fund. Nonetheless, it's an allocation in which I'm comfortable with, despite the fact that it's a little bit riskier having some individual stocks and exposure to some more speculative assets like cryptocurrency. So from that allocation, you can probably kind of see that I'm not really your typical Warren Buffett style investor, nor am I kind of on the other end of the spectrum of a Wall Street bets degenerate gambler. But how will all of this change for 2022? Well, the biggest change to my investment portfolio is that I do actually want to get into property and actually look to purchase my first buy-to-let. I've said this on my channel before, but one of my biggest goals for 2021 was to put myself in a financial position to be able to buy an additional property in 2022. And partly thanks to all of you guys watching this video, I'm now in a place where I can actually start to begin this process as soon as 2022 rolls around. Now, of course, this will massively affect the overall allocation of my investment portfolio, with the property value taking up the biggest chunk of the overall allocation at about 40%. And that will be largely down to the high initial principal, which I'll have to obviously put up to put a deposit down on the property in which I plan to purchase. It will of course allow me to acquire some good debt in order to buy an asset which could be valued somewhere in the realms of about £100,000, which will also provide me with some, I guess, semi-passive rental income as well. Now, aside from that, there are two additional reasons as to why I want to invest into property and actually allocate a larger portion of my investment portfolio to property moving forwards. The very first reason is, for now, most of you guys who are familiar with my total investment portfolio will realize that a hell of a lot of my holdings, especially individual stocks as well as the S&P 500, is obviously geared to the US stock market. So because of that, I certainly feel like I need a little bit more geographical diversification within that investment portfolio. So because of that, I think it's probably an ideal opportunity to actually invest into some UK property in order to diversify my investment portfolio just that little bit more. The second reason is probably a little bit of an obvious one, but it's down to the capital appreciation on the property in which I plan to buy. I'm definitely on a pursuit to aggressively grow my wealth, especially whilst I'm still in my 20s, in order to be able to benefit the most from the compound effect over the course of the next 15 to 20 years. And the fact that I can put in £30,000 to acquire roughly about a £100,000 asset is certainly a motivating factor for me in order to be able to achieve my financial goals. So that's one of the main ways which I personally plan to get to that £100,000 investment portfolio target by the end of 2022. And to be honest, guys, just simply by acquiring an additional property will probably get me most of the way there just by making that purchase. But aside from that, I'll still be investing into the stock market. I'm still going to be looking to, probably on a little bit more of an even split, actually invest into individual stocks as well as the S&P 500 too. Just on a personal level, I do certainly think there will be a little bit more uncertainty in the stock market in 2022, and I don't believe that we'll see the same kind of returns in which we've seen over the course of the past 12 to 18 months in kind of the next 12 to 18 months in the future. And the reason why I think that is inflation is so high right now. As of today as well, the Bank of England have just hiked interest rates for the first time, and because of that, I think that will contribute to slowing growth, especially across growth stocks. And as a result of that, I don't personally believe that we'll see another extravagant year of stock market performance. So because of that, I think it's important for me personally anyway, based on my own personal circumstances, to diversify my investment portfolio just that little bit more and actually just achieve one of my investment goals, which was to always own and always have additional properties which I can rent out and get the mortgage paid down and essentially acquire more assets over time. But fundamentally, the strategy won't change. Whilst I'll certainly have one eye on properties and my property portfolio, on the other side of the equation, I'll still very much be investing into the stock market. And if you guys do want to see what stocks I'm looking to invest in throughout the course of 2022, then be sure to click on this video here. And with that said, guys, if you did enjoy this video, be sure to drop a like on it, subscribe to the channel if you're new around here. And with that being said, I'll see you over in the next video.